Maayong hapon and good afternoon everyone. So we are the group 1 and for today's discussion guys, we are going to discuss a topic which is all about the partnership dissolution. So when we say partnership dissolution, this is when a partnership ends or changes in some way. It can happen by changing who's in the partnership or by completely shutting it down and settling everything. Now, classmates, our learning goals for this chapter is we will be able to tell the difference between changing who's in the partnership and completely ending it. And then we are going to understand how new partners can join either by buying a share or putting in money. Then the next one is we are going to know what bonuses mean in a partnership, and we are going to know as well what needs to be adjusted when a partner leaves. And then the fifth one is to understand how a partnership can be changed into a corporation. Now everyone, a partnership is built on trust and mutual consent. Once again, a partnership is built on trust and mutual consent. Now the partners must agree on who joins the partnership. Now, when a new partner joins, it automatically ends the old partnership and starts a new one. But this doesn't mean the business stops. It just means the old partnership agreement is replaced with a new one. Now let's say for example, if A and B are partners and letter C joins, so the original agreement between A and B ends and a new agreement with A and B and letter C is made. So this new agreement may change how profits and losses are shared. According to the Civil Code, dissolution happens when there's a change in the partnership's setup. So, it's a change caused by a partner leaving or joining or any other reason that affects the group's structure. Now guys, always remember that there are two main types of dissolutions as well. So the first main type of dissolution is we have the dissolution by change in ownership structure. So when we say change in ownership structure, this happens when there's a change in the people involved in the partnership, but the business itself continues. Like for example, the retirement or withdrawal of an existing partner. So that's one of the example. Another one, we have the incorporation of the partnership, which means turning the partnership into a corporation. So those are just a few example of change in ownership structure. Now another two main types of dissolution is we have the dissolution with liquidation. So this happens when the partnership is ending completely. That means that all assets are sold, debts are paid, and whatever remains is distributed to the partners. So those are the two main types of dissolutions. We have the dissolution by change in ownership structure and dissolution with liquidation. When a new partner joins an existing partnership, it usually happens in two ways. So the first one is we have by purchase of interests. So the money paid by the buying partner goes directly to the selling partners and does not affect the partnership's capital. So the partnership's records are simply updated to reflect the new ownership with no increase or decrease in overall partnership capital. Now, the second one is we have by investment. So that means not cover, no, not covered in this page. So this involves the new partner directly investing money into the partnership, which increases the partnership's capital. So the journal entry for a purchase of interest reflects the transfer without changing the total capital. Again, no, the journal entry for a purchase of interest reflects the transfer without changing the total capital. So, the debit, we have to debit the capital account of the selling partners, and then we have to credit the capital account of the buying partner. So, we have an example here, no? Example for this, no? Mary buys part of an existing partner shares in the partnership. So, here's the scenario. Now, Peter and Paul are partners with capital balances of 60,000 and 80,000. So, respectively, sharing profits and losses equally. Now, Mary joins by purchasing 1/3 of Peter's interest. The book value of 1/3 of Peter's interest is 20,000. Now, Mary can pay different amounts for this interest, resulting in 3 assumptions. So, we have the assumption 1. Mary pays 20,000, which equal to book value. So, for assumption 2, Mary pays 15,000 less than book value. And then assumption 3 is Mary pays 25,000 more than book value. Now, for journal entry for that, for all cases, no, debit Peter's capital worth 20,000 and then credit Mary's capital worth 20,000. Now, this entry reflects the transfer of capital, but the partnership's total capital doesn't change. Alright? Only Peter's capital account adjusts as Mary buys her share.
Case 3. Partnership admission by purchasing interest from multiple partners. In some cases, a new partner may join a partnership by purchasing a portion of the capital interest from more than one existing partner. This is the capital balance before the admission. The first one is Elizabeth with 60,000 pesos, and the next one is Alberto, 80,000 pesos, which is the total capital as the 140,000 pesos. And the next one is, in some cases, a new partner may join a partnership by purchasing a portion of the during admission. The first one is Wilbert purchases with 30,000 pesos from Elizabeth Capital and 20,000 pesos from Alberto Capital. This is the capital balance after the admission. The first one is Elizabeth with 30,000 pesos, and the next one is Alberto with 60,000 pesos. And the third one is Wilbert with 50,000 pesos. And the total capital with 140,000 pesos. Journal entry for purchase of interest from multiple partners. When Wilbert buy this portion of Elizabeth and Alberto Capital, the following journal entry record this transfer. The first one is Elizabeth Capital account with 30,000 pesos. The second one is Alberto Capital account with 20,000 pesos. The third one is Wilbert Capital account with 50,000 pesos.
Case 4. Purchase of all interest from all partners. In some situations, a single new partner might buy the entire interest from all existing partners. Journal entry for all entries purchased to record the transfer of the entire partnership entries to Wilbert. The following journal entry will be made. Debit Elizabeth's capital account 60,000 pesos. Debit Alberto's capital account 80,000 pesos. Credit Wilbert's capital account 140,000 pesos. This entry reflects that Elizabeth's and Alberto's capital accounts are reduced to zero, and Wilbert's capital accounts is credited with a total partnership capital of 140,000 pesos, indicating full ownership. This table is a statement of financial position for Palos Verdes Commercial as of June 30, 2028. It provides an overview of the partnership financial standing just before a new partner. As you can see the image, so na nyo makita din ang current assets, cash in bank na 50,000, allowance for double 75,000, merchandise na 100,000, annual supplies na 5,000. The total current assets is 230,000. Property, plant and equipment, delivery equipment nga 120,000, account depreciation nga 70,000, ato siyang i-minus para makuha na to ang 50,000. Store furniture nga 60,000, account depreciation nga 40,000, i-minus na to equal 20,000. So 50,000 plus 20,000 equals 70,000. Current liabilities, account payable is 30,000, notes payable is 60,000, total of 90,000. Partners equity is M Salva Capital 92,000 and Modelo Capital is 118,000, total of 210,000. First step 1, capital adjustment account. This account is used to reflect all the necessary adjustments to the partnership capital. Debits 7,000 for increasing the allowance for double accounts, 10,000 for delivery equipment adjustment, 1,000 for accrued interest expense. Total debits 18,000. For the credit sides, 15,000 for merchandise revaluation and 15,000 for store furniture adjustment. Total credits 30,000. For step 2, posting adjustment to general ledger. Merchandise inventory beginning balance sa credit side is 100,000. Adjustment entry number 2, debit side is 15,000. The total of 115,000. Allowance for double, beginning balance 5,000 for credit side. Entry number 1, 7,000 for debit side. Adjusted balance, a total of 12,000 pesos. The third one is accumulated depreciation delivery equipment. Beginning balance 7,000 for credit side. Entry number 3, 10,000 for debit side. Total of 80,000. Accumulated depreciation store furniture beginning balance for credit side is 40,000. Entry number 4, 15,000, total of 25,000. So ato na siyang i-minus. Accrued interest expense, entry number 5 is credit side 1,000, adjusted balance is 1,000 lang gyapon. For step 3, closing the capital adjustment accounting. Account merchandise 115,000 for debit side. So ang uban na dayon credit side like allowance for doubtful accounts 12,000 pesos, accumulated depreciation delivery equipment nga 80,000, accumulated depreciation store furniture nga 25,000, accrued interest expense nga 1,000. Since the credit balance of 12,000 is favorable, it is to be credited equally to the partnership M. Salva and N. Modelo based on their profits and losses equally.
So now, to illustrate the capital account balances of partners Juliet Alara and Mardania Padaya, who shared profit and loss of 70% and 30% respectively, were as follows. J. Alara capital of 60,000 pesos and M. Padaya capital of 40,000 pesos, which would be a total of 100,000 pesos. Evangelista Lada is admitted in the partnership by allowing her to invest cash of 30,000 pesos. Journal entry to the admission of Lada with a cash of 30,000 pesos. Lada capital of 30,000 pesos to record the admission of Lada. So the effect would be after the admission, the cash or the asset increases by 30,000 pesos, while the capitalization of the new partnership becomes 130,000 pesos, which was shown below. Before the admission, the J. Alara capital is 60,000 pesos and the M. Padayo capital is 40,000 pesos with a total of 100,000 pesos. And after the admission, the J. Alara capital of 60,000 pesos and M. Padayo capital of 40,000 pesos and the E. Lada capital of 30,000 pesos. Assume that the agreement among Alara Padayo and Lada provides that Lada is to make an investment that will give her a 20% interest in the new firm. In this case, the combined capital of the original partners of 100,000 pesos represents 80% of the new capital, which is 100,000 pesos divided by 80%, which would have the total of 125,000 pesos. Therefore, the incoming partner should be required to invest 25,000 pesos for a 20% interest. The journal entry to be recorded about the admission of Lada will be cash of 25,000 pesos, the E. Lada capital of 25,000 pesos to record investment of Lada. The computations would be Alara capital of 60,000 pesos and the Padayo capital of 40,000 pesos, which would have the total of 100,000 pesos. So, the new capital of Lada's admission would be the 100,000 pesos divided by 80%, which would have the total of 125,000 pesos. Deduct the original or the capital of Alara and Padayo of 100,000 pesos investment of Lada for a 20% interest of 25,000 pesos. Therefore, the incoming partner should be required to invest 25,000 pesos for a 20% interest. Like the admission by purchase of interest, assets are revalued and necessary adjustments are reflected before the admissions of the new partner. So the bonus method. Bonus refers to the transfer of capital from one partner to another in consideration for a good reputation or earning a capacity of the latter. Bonus is not an account title so that it cannot be debited or credited. It has the effect of decreasing the capital balance of the partner giving the bonus and increasing the capital balance of the partner receiving the bonus. Terminologies. There are 4 terminologies. The first one is total agreed capital. It refers to the amount of the new set of capital. It's sometimes termed as new firm capital or agreed capitalization. The second one is total contributed capital. It refers to the capital of both old and new partners combined. The third one is total credit or new partners. It refers to the interest or equity of the new partner in the partnership. And lastly, the total contribution of a new partner. It refers to the amount actually contributed by the new upon admission. Bonus to the new partner. The journal entry would be cash of 50,000 pesos, Lada capital of 50,000 pesos, to record the investment of Lada J. Alara capital of 70% would have the 17,500 pesos, M. Padayo capital 30% would have 7,500 pesos. The Lada capital of 25,000 pesos. The capital of Alara and Padayo, as they provide bonus on a 70% minus 30% basis, were being reduced to 42,500 pesos, which is 60,000 pesos, and 17,500 pesos is subtracted, and it would have 32,500 pesos respectively. Neither the new partner nor the old partner receives bonus. The journal entry would be cash of 50,000 pesos, ILADA capital of 50,000 pesos, to record investment of LADA.
Withdrawal or retirement of a partner. A partner can withdraw or retire from the partnership ceasing to be a partner. The basic accounting problems involved are as follows. First is sales of interest to an outsider. The partner sells their share of the partnership to someone outside the existing partners. Second, sale of interest to one or more of the remaining partners. The partner sells their share to one or more of the remaining partners. Next is sale of interest to the partnership. First, at book value. The partner's interest is valued at the amount recorded in the partnership books. Second, more than book value. The partner's interest is valued higher than the book value, potentially reflecting a bonus to the retiring partner. And the last, less than book value. The partner's interest is valued lower than the book value, potentially reflecting is a discount due to the retiring partner. Sale of interest to an outsider. Here's the example. When a partner sells their interest to an outsider, like Paeng selling his 30,000 share, the capital is just redistributed between the partners. Paeng's account is reduced and Ari's account is increased by the same amount. No new capital is added to the partnership, just a change in ownership. Selling to remaining partners. Here's the example. When a partner withdraws, they can sell their share either to the remaining partners or the partnership itself.